You've probably heard that the only way to reach an 800 credit score is by juggling multiple credit cards. That's a myth. It's a system designed to keep you trapped in a cycle of high-interest revolving debt. There is a mathematical alternative. You can bypass the credit card companies entirely by using credit builder microloans to hack the scoring algorithm without risking a single dollar in overspending. A credit builder loan is essentially a forced savings account. Instead of getting money up front, you make small monthly payments into a locked account. The lender reports those payments to the credit bureaus, and when the term ends, you get your money back. This chart shows exactly why this works. FICO calculates your score based on 5 factors, but 2 pieces do the heavy lifting. Payment history at 35. Every time you make a payment on a microloan, you feed a steady stream of positive data directly into that massive 35% payment history category. And because you deposit the money first, lenders won't even run a hard credit check to approve you. By leveraging these forced savings loans, you remove the financial hazards of revolving debt entirely. You build an elite credit profile using your own money. Step 1 is establishing your foundation. Open a short-term credit builder account, typically 12 to 24 months, to start generating positive payment data right away. Platforms like Self are built specifically for this. To keep your cash flow manageable, select their entry-level $25 a month tier. The goal here is consistency, not volume. But pay attention to the source of your loans. If your credit report only shows accounts from fintech apps, the algorithm might flag your profile with a consumer finance account penalty. FICO sometimes views these as subprime loans, which can cap your maximum score. To clear that hurdle, you will eventually want to graduate to a CD-backed loan from a traditional local institution, like a community credit union. This initial setup constructs a reliable payment history quickly, while ensuring your file avoids any algorithmic red flags as you continue to build. Now that we have payment data flowing, we need to address the length of credit history, which makes up 15% of your FICO score. To max this category out, the algorithm requires aged, long-standing accounts. Step 2 targets this specific metric. A product like the Credit Strong Magnum plan allows you to select an installment term that stays open for up to 10 years. A 10-year loan functions as a solid timeline. It acts as an anchor while you open and close shorter accounts. When those shorter loans finish, your average credit age would normally drop, but this decade-long anchor keeps it highly stable. This tactic permanently solves the age problem. You never have to follow the outdated advice of keeping old, tempting credit cards open just to preserve your credit age. FICO's algorithm also evaluates your credit mix. It specifically checks to see if you manage both installment loans and revolving credit lines. Step 3 fulfills this requirement. You open a kickoff credit account to satisfy the algorithm's demand for a revolving line without taking out a credit card. Kickoff reports to the bureaus as a $750 revolving credit line. It costs a flat $5 a month, and they don't issue a physical card. You can only use it in their specific online store. Because you aren't racking up regular purchases, your account registers a permanent near 0% credit utilization rate month after month. This is utilization mimicry. It simulates perfect, responsible credit card behavior, allowing you to maximize your score without ever holding dangerous plastic in your wallet. Step 4 is execution. You must activate 100% autopay on all 3 of these accounts the day you open them. Your entire strategy relies on never missing a payment. You also need to avoid the all-zero penalty. If you try to pay these microloans off early, your FICO score will drop because the algorithm needs to see active, ongoing credit usage. This graph illustrates the algorithmic sweet spot. FICO gives the highest rewards to installment loans that are almost paid down. As your balance crosses the 10% threshold, the algorithm applies a heavy multiplier to your score. True credit engineering requires patience. By treating your debt amortization as a controlled, slow-drip asset, instead of a race to zero, you squeeze the maximum point value out of every loan. Let's review the finalized stack. You have a short-term foundation with Self, a long-term anchor with Credit Strong, and utilization mimicry with Kickoff, all locked in on automatic payments. This engineered approach replaces the outdated, high-risk system of opening multiple revolving credit cards and constantly monitoring statement dates. More importantly, it secures a psychological victory. You are constructing an elite credit profile while actively forcing yourself to save money. If you are committing to this card-free path, drop the phrase "no cards" down in the comment section. And if you're starting this journey with existing collections or charge-offs dragging you down, click the video on your screen right now for our step-by-step deletion strategies. Building an exceptional credit profile is a marathon, but now you know exactly how to run it completely card-free.